Oh. Oh my God. Can you guys hear me? Can you guys hear me now? Oh. Oh my God. I just went on this whole spiel. I talked about my channel and I didn't realize my OBS was muted. Well, that's fucking cool. Can you guys hear me now though? Should I do my spiel again? All right, take two. Okay. So all I was saying was that I cannot believe I was muted. What a fucking noob mistake. So if you go on my channel now, you'll start to see that I have recurring videos that are starting to come up now. So on Fridays, I'm releasing the Bitcoin market recaps from the stream, and on Tuesdays, I'm releasing what I'm calling Technical Tip Tuesday, the triple T, just the tip if you prefer that. And I should switch it to just the tip. That'd be perfect. So this week was Fibonacci retracements. Last week was MACD divergence. And then the first one was RSI divergence. And basically just the whole goal is that, as you're hearing me go through my market recaps, or, maybe you hear someone else in another market recap, give a term like RSI divergence or MACD divergence or Fibonacci retracement set. I'm just trying to create a library so that, just to have like a constant reference, because I get asked a lot of the same questions, and I just want to make sure that I'm, when someone does ask me a question like, what is MACD divergence? Like, what does that tell us? Sometimes I don't have the opportunity to fully explain it. So I can direct them to the video where I have an in-depth discussion about it. And yeah, basically just, a nice little chunk of resources, reference material, if you will. Okay. What other business do we have to discuss here? I'm sure if I'm going to try not to talk about the Wyckoff Institute much. I mean, I'll touch on it, but I mean, Twitter kind of speaks for itself right now. And okay, should we get into the material? Or do you guys have any requests before we get into the actual Bitcoin market analysis? All right, cool. All right, so let's start on the high-level overview here, and let's start on the 60-minute candles. And for those of you who are sick of hearing me talk about the Wyckoff distribution phases, get over it, because day by day it's looking more and more likely that this is the way the market's heading. So let's go ahead and look at the current market here, and let's see how we can apply it to the Wyckoff distribution phase. So for those of you who aren't familiar with that, I'll just go ahead and touch on it briefly. Let me pull this up. Wyckoff. Oops. Wyckoff distribution. All right. So I'm going to stockcharts.com, and they've got a couple articles about the Wyckoff method and things like that. And this is what we're looking at here. So where are we at? Okay. So right now we're in the distribution phase. And part of the distribution, the distribution phase, if you're looking at the market cycle, you can kind of think of it as the market goes from low to high and then high to low, and it kind of just sloshes back and forth like water in a bathtub, right? It goes from the oversold area, starts low, it swings high to the overbought area, and then it marks, it has a markup to the overbought, a markdown to the oversold, and it just kind of just sloshes back and forth. As supply and demand tries to find equilibrium. And what this represents is just a battling of the supply and demand and the constant shifting of emphasis in the market. All right, so this guy, Richard Wyckoff, He started studying the institutional and large investor influence in the markets back in the early 1900s, and what he noticed was that there were some key characteristics. Jesus, key characteristics. Did I say that right? Key characteristics. Close enough. Of market movement that can give us insight as to where the market is going to, where the market is heading. And right now, I'm placing the argument that I feel that we're in something like this, this distribution schematic number 2. It's important to note that markets aren't going to behave like this 100%. It's not like saying it's like a roadmap. It's like, oh, we're going here, and then we're going here, and then we're going here, and then here, blah, blah, blah. Like, that's not how it works. What we want to take away from this are these key points of interest along the way, because it's kind of like a roadmap and not necessarily like a step-by-step process of like finding price targets. It's more of a general market sentiment that we're measuring, right? So where I believe we are, and I'm going to show you guys here. Let's pull you down, make you nice and small. This little guy. So we'll put you. Is this still on the stream? Can you guys see this? Let me see, make sure. Okay. So where I believe we are in this Bitcoin market cycle is I believe we're somewhere in here. Oh wait, God damn it, that's the wrong one. So I believe we're somewhere in here. I almost just knocked coffee all over my desk too. I don't know if you guys heard that. So I believe we're somewhere in here, in this, and what is called the LPSY, or the last point of supply. Okay, and we're right in here. So you can see, it's making tests of this buying climax and secondary test zone, which is really just like this band of resistance right in here. And something to note is that volume plays an important role in the distribution phases, because it tells us the price movement compared with the volume tells us where supply and demand lie, right? So if we see if we see what you can call to be a spread, right? The spread is going to be so if this is the candle body like that, and you have the wick, the spread is going to be this whole length right here. So it's the body plus the wick size. It's called the quote-unquote spread, right? And so you can imagine that as you see big candles like this, and it occurs on high volume, that currently the demand is very high compared to the supply. And likewise, as you see small spread, or a quote-unquote narrow spread, with a candle that is much smaller, but the volume's higher, that typically signals a reversal in the market, and it also shows that supply and demand are starting to equal out, and there's likely to be a shift more toward the demand, right? I'm sorry, more toward the supply. So you can think about it like this. So as the demand goes up, the price goes up, and as the supply increases, the price tends to flatten out and then go back down. So we're in this balancing act between supply and demand as the buyers and the sellers try to reach an equilibrium with each other. Okay. So this last point of supply is very important for this distribution phase, because what it represents is the last little bit of buyer demand, and it shows that these last little shoves are actually being dominated by supply. So it's like, if we go ahead and look here, it'll kind of become a little bit more clear here. So let's zoom in a little bit too. What is it? Let's do 15. If you look at the 15-minute charts, for example, zoom in real close, and then we'll pull this back up. So the last point of supply is going to be like this whole area right in here, and what it represents is it's the it's the last little I don't want to say up thrust, that's the wrong word. It's the last little shoves upward by the buyers. You can see them here, you can see them here, here, as supply starts to dominate the market, right? And as supply starts to dominate the market, you see that the market will actually start to take a turn downward and enter in what is called phase C. And what you'll see is that it starts off very slow, and then the price action takes a big dive, and it starts to see stronger moves downward because people are starting to lose confidence. The demand dies down, and you start to see a wide spread with the candle size and less demand starting to keep the price up. So this represents a point in the market where supply is starting to dominate the market activity, and it starts to push the prices down, right? And so this whole process of this Wyckoff schematic and the Wyckoff distribution phase it's this handing off from the buyers to the sellers, and it's this very detailed process with milestones throughout it, right? And you know, it's still in the process of, in my opinion, it's still in the process of moving to phase D, which would be right here. Oh shit, I closed it. Oops. Well, phase D would be phase D would be right here as the price starts to test, and then all of a sudden it starts to go down and retest, and then ultimately, you know, go down even further. And so we're not quite in the oh shit, the market's going to dump yet, but it's leaning that way, right? I'm not saying it's definitely going to happen, but I'm saying it's leaning that way, and it's showing characteristics, showing signs. I'll just stop saying that word. Showing signs that we could start to see supply dominate the market moves here. Okay, before I go any further, you guys have any questions about what I just talked about? No questions? All right. So let's talk about price targets then. So if we look at something that's also interesting to watch is if we look at this current distribution phase, right? Okay, someone in the chat wants me to explain supply more time. Sure. So think about supply as sellers, right? So think about demand. Demand equals buy. Here's supply. Supply equals sellers. Okay, and so as demand, so you can think like if demand's dominating the market, the price goes up, and if supply dominates the market, then the price goes down. It's basically just a different way to word bulls versus bears. You know, this would be a bull, this would be a bear, something like that, right? So if it helps you to organize the concepts better, just think about it in terms of like buyers and sellers, right? Supply and demand. I'm sorry, demand, supply, buyers, sellers. That's how I like to organize it in my head. But the actual terminology for the nomenclature is supply and demand. One question: do you ever take fundamentals into account? I like your sign of weakness, like your sign of. Okay, sorry. Let me reread this. One question: do you ever take fundamentals into account? Like your sign of weakness was the China FUD stuff. I doubt this would have showed without it at this time. So I honestly, like, I struggle with this concept, if I'm being completely honest, because part of me, of course, fundamentals are always important. But what I like to think is that the technicals are going to show us how relevant the fundamentals are, right? The fundamentals will tell us which direction we're going to go, but the technicals will say how far we're going to go or what potential price targets may be. The fundamentals won't tell us a price target per se, unless it's Goldman Sachs coming out and saying, "Whoa, we're going to go to 6300," something like that. But it's technicals and fundamentals aren't mutually exclusive, and they should be married together because they help make sense of the market as best possible. Oh, thanks for the cheer. I haven't had cheer on here in a long time. By Boostakop. Okay, any more questions before I go on to the macro market and the implications of this current market within the macro scheme? Any questions regarding that? I feel like the stream is delayed, so I'm going to have to give you guys a second to catch up with my chat, or with my banter, rather. When do you think Wyckoff deviated for this run? I'm not sure what you're asking. Where can we ask questions? Right here in the chat. If you have a question, just type it in there. So the question is, only way out is all-time high. Oh, okay. So I saw someone else's question in there that I wanted to address. They said, why did I pick this schematic specifically? So I sent out a tweet, I think it was yesterday. Yeah, here we go. So I sent out this tweet yesterday, and I'll go ahead and doodle on this guy. So this was as we were entering into phase C. Yeah, as we were entering. It's good. What's a good color? Is black okay for you guys? Should I stay with black? Maybe red? Red's good. Okay, so I sent out this tweet as we were entering into phase C, and I said, what was the context of what I said? We have to keep an okay. So at that moment when I sent out this tweet, I said we will have to keep an eye out on this potential distribution phase, because it could go either into an upthrust after distribution or into last point of supply. So if we're looking at this market, this is like, you can think about it like this, right? The price is going up, and once it goes into phase C, there's a potential for a further upthrust, which is this, and that would push us into new all-time highs. And so I was presenting these two options because it can go either way as it goes into phase C. And clearly we didn't go this route because we're not sitting at a new all-time high, and as of the time of this art, that's why I wrote this right here. And as of the time of this stream, we're somewhere in here, but you don't know whether to view the market in this light or this light until you see the upthrust. You don't know. Leading up to the upthrust, all you can do is speculate as to what the market's going to do. But now that we have more information, it's pretty clear that we're in the last point of supply here with our market phase. And if you look at this last tweet I sent out, right, where is it? Right here. I go into more detail here, so you can see that it's pretty clear that we're kind of just putzing along in here. You think phase C will come right after the fork? I think we're already in phase C. I'm assuming you mean phase D, when it starts to just dump. I don't think it'll wait that long to do that. I think something else will happen if it does do that. Okay, so the question is from Twitch, and the question is from Moon Bagel. He said, I don't know what Moon Bagel is, but cool name. He says, good time to short or wait until last point of supply. So if you pay attention to my charts, I don't like to ever explicitly say you should short here, you should buy here, or good selling opportunity here. I don't ever like to do that because I would rather teach you guys so that, you know, like if I don't hand you a chart in the future, you know, you could still kind of come to an educated guess. But if you pay attention to this text in here and this text in here, there are a lot of really great clues as to how to play the last point of supply. And if you look, oh wait, maybe I didn't put this in here. But typically, I'll just go ahead and say it instead of being so cryptic. Typically in the last point of supply, that's when the more aggressive traders will start to speculate and formulate their short positions. So unless you're an experienced trader with managing risk, I personally wouldn't recommend shorting here. I would wait for the confirmation. But you know, if you're feeling exceptionally confident in the market, or you just can't wait for the confirmation, you know, developing your short positions in here might not be a bad idea. A question from YouTube. Okay, so a few questions from YouTube. So this guy says, my question is, we think we are in phase C. Maybe we are still in phase A. What confirms that? Probably you're covering it now. Okay, so I'm going to sideline that question because I'm going to address it in a longer question with more details. Which are your preferred indicators and why? I have a very small tool set that I like to use. Bollinger Bands, of course. Sometimes I'll reference Ichimoku clouds. I really like to use the EMAs, specifically the EMA 50 right here, which is the blue guy, and the 200 EMA, which is the red guy, and then the MACD and the RSI, and of course volume. Can't do anything without volume. And that's about it. I keep my tool set very simple because I feel like they're very powerful when used in conjunction with one another. And yeah, you know, I don't feel like in order to be a successful trader, you need to have a lot of fancy indicators. You know, it definitely helps to get further insights, to get jumps on the market. But in terms of just being a generally successful trader and developing a skill set for success, I don't think you need a very complex tool set. Did John say anything about your idea? I'm assuming you mean John Bollinger. And regarding my Wyckoff distribution phase. Okay, so I'll touch on John Bollinger with this Wyckoff distribution phase in a minute too. How does volume correlate with Wyckoff? So that's a very good question. So volume is paramount with this distribution phase. Let me center this real quick. With this potential distribution phase, and it's paramount because it gives us insight into where the supply and demand lies within this what they called what Wyckoff likes to call is called a trading range. Trading range, or a TR. You know, sometimes you see it called a TR, but it's a trading range, and the trading range is this whole thing right in here. And right now we're in a distribution phase, and volume is key. So what we want to see is on the buying climax, we want to see a climax in volume, something like this. You know, depending on where you are, whether it's a sign of weakness or the up thrust, the volume is going to give you indications as to where, or as to the validity of these little milestones. I can't really go into detail, but I'll provide literature that that'll give you further insights on these little milestones in here, and you can feel free to read that, but it would take a pretty long time to actually go through that in the stream. All right, question from Twitch. What MACD settings are that? That was not a complete sentence. What MACD settings are you using? I'm just using the default settings for MACD. How do you use volume exactly? That's a very broad question. Typically, you want to use volume to support the idea of a move. So one of the most common ways to use volume is to substantiate a breakout. So like, for example, here, right, you have this little symmetrical triangle, maybe an ascending triangle, depending on how you drew it. And so if you wanted to trade this, you'd want to wait to see a breakout in volume to support the move that, like, people are in a collective agreement that we're going up, right? You see here that there's a nice spike in volume. So if you're waiting to trade this breakout, the conservative trader would not enter a position within this pattern. They wouldn't enter in here. They would trade upon the breakout and confirmation of the volume here. So you know, that's one way that you can use the volume. Oh, you're asking, okay, so the question is, why does my MACD indicator look like that? Because I'm not using the standard, I'm using standard settings, but I'm not using the standard MACD indicator. I'm using, what is it called? MACD colors, split colors is what I'm using. Okay, so I want to go ahead and zoom out and put this this current market into perspective within the scope of the entire run from the triple digits to 6,200. So let's go ahead and zoom out to the. Do we want to do 1 day candles? Yeah. All right. Let's make you guys. Well, I guess I can leave that there. Okay. So if we look at the 1 day candles, and maybe even the 3 day candles. I won't go into that. Let's do 1 day candles. Okay, so if we look at the 1 day candles, we see that we've been, the price has been contained within this ascending channel throughout the whole length of this move, and it's pretty obvious, right? There's a very clear upper boundary and a very clear lower boundary, and it's kind of just been pinging back and forth within this ascending channel right here. This whole thing is called an ascending channel. And right now, our current trading range, our distribution phase that I've been talking about, is right here. So I'm just putting this our previous discussion into context within the entire move from the 700s to 6,200. Okay, and it's important to note that I'm on log scale as well. I'm not just on a standard scale. I'm on log. So if you look at this market, you see that the distribution phase within the scope of the market isn't really that big of a deal. But what is a big deal is the implication of this distribution phase. Let me see if I can zoom in here. Let me move this. Unlock. All right. So something that I've been tracking for a while is a more macro distribution phase. So once again, we're currently in here, but I believe that this is just part of a more macro distribution, right? So I'm going to pull up our current chart, and I'll just put it like a small version of it right here. How do I want to do this? Yeah, okay, so we'll do this. Make you small again. Okay, this is gonna be good. Yeah. So we'll do this. Maybe, yeah, we'll put it right there. Yeah. Okay, cool. So this whole thing right here is this, right? But if we, I don't know if you guys can see this because it's kind of blurry, but so this is our preliminary supply, our PSY, our BC, which is our buying climax, automatic reaction, second test, sign of weakness, and then an up thrust, right? So if we take this whole trading range and you put it within the context of a macro up thrust, it becomes pretty apparent that what we're seeing is actually a macro distribution phase within the ascending channel, and it explains why we failed to actually reach this upper channel, right? Because everyone was calling to test, 7K right here, 7,000, because that's the upper channel right in here. But if we look at this through the lens of this macro distribution phase, we see that the preliminary supply, which is right here, is actually right here. The buying climax, which is right here. The automatic reaction, which is right here. The secondary test, which is right here. The sign of weakness, which is, this is China ban, and I'll put that in quotation marks. That's the sign of weakness here. And then we're currently seeing an up thrust on a more macro scale, which is our current distribution phase. So you can imagine that a breakdown of our current distribution phase, this small guy, this guy, would actually have us coming back down to retest our secondary test support level, which is right around 5,000. So we have nice support right around 5,000 here. And this is going to really be the make or break point for this macro trend for Bitcoin. Because if we break below the secondary test, this resistance rate, I'm sorry, the support right here, let's make it a different color. Get blue? Yeah. So if we look at this support level right here, right? So zooming in here on this guy, right, and keeping in mind that we're right here, a further breakdown of our current trend would have us breaking below this support level. And it would have us ultimately testing this ascending channel. And that ascending channel test would put us right here on the macro scale. So you can imagine that we'd go down like here, and we'd probably bounce, reach a last point of supply, and then come back down, which would have us, so if you want to trace it along, a break below this support line would have us here, right? Have us here. Last point of supply would be right here. Last point of supply. And then we'd enter in a phase D, which would have us going straight down. Keep in mind that this is all speculation at this point, but it all stems from our current distribution phase. And that's why I've been tracking it so closely, because the implications of this would be huge. I'm not trying to scare you guys. Keep in mind that these are one-day candles. It would take a while to play out, but it's something that everyone should keep in the back of their mind as they're taking their speculative positions in the market. All right, so let's look at some more questions here, because I'm sure I just probably freaked some people out. What would invalidate? Okay, so question from the YouTubes. Someone asked, what would invalidate this distribution schematic? What would invalidate it is, there's a number of things that would invalidate it. I'm assuming you mean the current one or the Mac? Let me ask you this before I continue. Are you asking what would invalidate the current one, or the more macro one that we're seeing here? Okay, question from Twitch, from Robin DeHood. If phase D happens, how long do you think it will happen? So I think phase D is actually, I'm assuming you mean, our current phase D, or potential current phase D. I think phase D will happen a lot quicker than the phase A and phase Bs, just by the simple fact that, the saying goes like this, that bulls take the stairs, bears take the window. You know, it takes a long time to build up to a price level, but it takes a very short amount of time to crush it. So I think the phase D, the phase C to phase D transition will happen a lot faster than the phase B, for example. Phase B is typically the longest phase. Phase C and phase D, you know, phase C is probably the shortest, and phase D just happens indefinitely until it goes back into the accumulation phase. Okay, question from YouTube. How would we invalidate the current one? So we could invalidate the current one. How'd you get up there? So this should say up the rest right there. So we can invalidate the current one any number of ways, right? Like we can invalidate the current one by, you know, going sideways and consolidating and then breaking up. You know, that's possible. We can invalidate the current one by just starting to trend upward. You know, breaking resistance here, finding support and continuing upward. That would invalidate it. There's a lot of things that would invalidate it. But what's most important to keep in mind is that we are currently trending along, and as long as it sticks to that this last point of supply scheme and principle, that it's not looking too good right now. So someone asks from YouTube, possible bottom trend holds and time to short more bleeding alt. I'm not sure what that means. How long do you think it will reach? How long do you think it will retrace 50%? I'm not really sure what you're asking there either. Okay. On 85% Ether and 15% Bitcoin, you think I should trade Ether Bitcoin ratio and make it 50-50? So my current opinion of the Ether ratio, the Ether Bitcoin ratio, let's go ahead and look at it. If we look at like the 120-minute chart, actually let's look at the 12-hour because there's a lot of interesting shit happening here. So the Ether dominance within the Bitcoin market is not looking very good right now. It's treading water, and probably just based on like the DevCon EEA sort of hope, and but overall, like the Ether influence within the crypto market is not looking very good. It's losing a lot of market dominance compared to Bitcoin, and it's kind of hemorrhaging on the USD markets as well. So in the event that Bitcoin decides to just like go to the depths of hell, there's no telling how the ratio will react until it reacts. You know, I would like to tell you that there's a simple answer that this will be a trend continuation, but it's entirely possible that this is going to flatline and go upward. You know, maybe Bitcoin goes down and Ether goes down too, but it doesn't go down as fast. So Bitcoin goes here and Ether goes here. That could propel the ratio up. You know, there's no way of knowing how the ratio is going to react. And I find trading the ratio to be slightly unreliable on a day-to-day basis, but on a macro scale, it's very telling about the health of Ether within the crypto market. How do you account for forks influencing these trends? On a macro scale, I don't. Okay, sorry, I need to revise this question. Robin into Hood said, how low do you think it will retrace 50%? To be honest with you, I don't know. If I wanted to give a conservative estimate, let's look at, I'm assuming you mean Bitcoin. I don't really like to call price targets like this because calling a price target on a macro scale like this would require taking into account a lot of factors. So if I were to draw out some Fibonacci retracements from here, let's go Fibonacci retracements. I would call this the bottom of the run, and I would call this level the the 600s, upper 500s, the beginning of the run, because you see that's when it starts to obey this channel really, and this is when the macro bull market really took off. So I would call this price level the main base, the 100% retracement, if you will. And let's go ahead and plot out our fibs here. So we go from here to here. Okay, what do we see? We see it obeying the Fibonacci retracements very nicely, right? So if we were to do a 50% retracement of the entire run, it would have us right at 3,400. And I would not be shocked to see it go down that low. You may have noticed that I put my little arrow there, but there's a lot of support in this area, and a 50% retracement would be a really healthy macro pullback before a bullish continuation or a possible bearish continuation. We don't know. It's too soon to know that, because we don't even know if the market is going to pull back. It's entirely possible that Bitcoin just says, fuck Bitcoin, Schmitcoin, and it just goes to $10,000. Like, it's entirely possible. This isn't the word of God here. These are just observations I'm making in the market. Oh, okay. This is a really great question here, from Vagazi Windows 95. If a significant correction does come to Bitcoin, do you see money flowing back to altcoins, or will the whole crypto market suffer? Okay, so this is a really great question that me and my guys in my Discord community, my trading community that I host, we've been following this pretty closely, and this is really interesting. So going along with this, I don't know why I closed this. Going along with this macro Wyckoff distribution here, is a really crazy observation that one of my dudes in my Discord made. That let me pull this up here. That we are actually I don't know if you guys can see this, but the altcoin market cap, if you look at the total crypto market cap, excluding Bitcoin, right? Let me do, is that good? I think, yeah, okay. Total, so this is a chart, and this is publicly available. This is on CoinMarketCap. If you look at the total market cap for the entire crypto market, excluding Bitcoin, it is bearing an eerie resemblance to a Wyckoff distribution, which falls right in line with our macro Bitcoin distribution. Okay, so this would be our PSY right here. This would be our buying climax. So buying climax, second test. Sorry, my handwriting's dog shit right now. This would be sign of weakness. This would be our upthrust, and this would be our last point of supply right here. So if you're looking at this chart right here and trying to put it over here, we're right in here, and phase C, a last point of supply, which is pretty crazy to think about, because this dates back to, what is this? Early in the year. This is February 17th, right when the entire bull market really took off. So the entire Bitcoin, the entire crypto market, sans Bitcoin, excluding Bitcoin, is showing a macro distribution phase, and it makes perfect sense, right? If we think about it from a logical standpoint, the altcoins, the reason why they're bleeding right now, people are saying the altcoins are quote unquote bleeding. It's because all the capital is flowing into Bitcoin, right? So like this isn't new money that's flowing into Bitcoin. This is the money that was in the altcoin market now propelling Bitcoin. And it's evident right here. Like the last point, we're testing last point of supply for the entire altcoin market right now. This is right in here. And it kind of begs the question, if Bitcoin dumps, is that going to be a crypto market wide dump? I'm inclined to say so, because I mean, let's fucking be honest here. Like, there are a lot of coins that are way overvalued. Like, there's no reason for a lot of these coins to have the prices they do. And so I have to imagine that if Bitcoin decides to drop, this is going to propel the altcoin market into phase D, and we're going to see. Don't quote me on this, but it's entirely possible that within the next 6 months, we may see the beginning of a crypto market-wide recession of some sort. That remains to be confirmed, but it's something that I'm keeping a close eye on, because the implications of that is fucking huge. Okay, question from YouTube. This scenario shows, what does it say? This scenario shows we are going down from here. Is there going to be a bull run and maybe all-time high as we approach the 2x fork? I have no idea. That didn't happen with the Bitcoin Gold. So, I mean, I really have no idea. I'm not going to claim to have any foresight into that. I'm just noting the current market and how it's behaving. All right, so did I spook you guys enough? You guys have any questions about any of that, the Wyckoff distribution? I know I just like bludgeoned you with distribution stuff, but I think it's important, and I think it's really key that like we get a jump on this as soon as possible, so that you don't get left holding the bags for some rich asshole that wants to manipulate the market. I think it's just really important to keep an eye on. Another question from Twitch, from Robin DeHood. He's asking if I'm on the sidelines or if I'm holding some coins. No, I'm not holding anything. I'm not interested in holding a single coin. What I'm looking to do is short on a macro level, is what I'm looking to do. Put in a big fat short in anticipation of a potential macro reversal here, and at the very least for the current reversal that we're seeing here. I'm not looking to hold any coins. The altcoin market looks horrible, and I don't trust it for a second. Okay, so for a couple of guys that are asking how to join the Discord, there's, oh, I don't have my link in here. Shit. There's a, I'll link you to my Patreon here. If you want to join the Discord, it's via this Patreon link here, and I'll post it in YouTube here. And I'll post it in Twitch if you guys are interested. And that just gives you access to the Discord. Are there any market, like before we move on, do you guys have any last questions before I start looking at the other markets that you guys want to check out? Okay. Well, no one has any more questions about this stuff. Do you guys have any coin pairs that you guys want to check out? I'll go ahead and give you my opinion on some of the market trends if you're interested in hearing my 2 cents. Okay, so someone's asking about my my 3 pushes to a high. So let me pull that up. So I want to say it was a few days ago. I don't know. Everything just seems like a giant day to me. A little while ago, I put out a if I can open up this damn website. I published an idea talking about the 3 pushes to a high. TradingView is being a piece of shit. Hold on, sorry. All right, here we go. So let's go to. Oh yeah, and also, you know, if you guys, you know, while I highly encourage you to join the Discord because it's the best way to get in contact with me and get in contact with, you know, all the really great traders that we have over there. You know, if you can't swing the money, I totally get it. That's why I put out a lot of this free content. And one of the avenues to get some of my free content is my TradingView account. I publish all my ideas there. You know, my Twitter and TradingView account, I publish all my ideas there. And one of the ones I've been watching is this, it's called a 3 pushes to a high. And it's a strategy using the Bollinger Bands to mark reversal patterns. So if we look at this 3 pushes to a high here, there are some really basic characteristic. Some basic. There are some key qualities that are easy to spot, but a lot of people don't notice them. One of them is going to be a narrowing of the bands. Another one's going to be. So this is called the. I don't have this pulled up. Let me show you guys what this is. This indicator on the bottom, it kind of looks like RSI, and it kind of acts like RSI, but it's not RSI. It's called %B. And what %B measures is just the distance of the candle from the edge of the Bollinger Band. And this is just %B. It's available on TradingView. It's a pretty common indicator. It's developed by John Bollinger. And what we see here is on the 3-day candles, we see the key characteristic, the key qualities of a 3 pushes to a high. Okay, so we see, I'll go ahead and list these. I'll list these out for you. So we see, well, first of all, we see 3 pushes, right? 1, 2, 3 pushes. Okay. The other one is we see a narrowing of the bands. So narrowing of bands. This is sometimes called a squeeze here. You might hear that terminology, a B band squeeze. This is sometimes referred to. And then another characteristic that is essential is using this %B indicator here. We see that with each high, so we see 1, 2, 3, it is failing to make a new high here. So we see 1, 2, 3, and they're failing to make a new high. So it's showing a lack of market push as it approaches the edge of the B bands. So let's see, %B decline. And what this represents is it represents a macro reversal, because these are 3-day candles. This is a big deal. So, and this is timed perfectly with how Bitcoin's positioned with its Wyckoff distribution, and how the altcoin market is positioned with its Wyckoff distribution I just talked about. And so this could have us dropping pretty substantially low. Like, I'm talking down to this support level right here at the 100. Like, we could see a major pullback for Ether. It is not looking healthy whatsoever. And this 3 pushes to a high is a pretty damning piece of evidence here. Okay, some more comments from Twitch. What do you think? What do you think I should do? I'm in the red since I bought my coins in. Oh no. Okay. Let me listen to this question. What do you think I should do? I'm in the red since I bought into my coins in May. Sell and wait this out, or just hold? Man, I would say it really depends on what coins you bought and how much you bought and how much you need the money. If it's money that you're willing to just throw away and it's not that vital, I'm not going to give you advice on this. Fuck. I'm assuming you bought somewhere over here. That sucks. So you bought somewhere like right here, somewhere in here, maybe up here at the all-time high. Damn, I'm sorry to hear that. It really depends on what you want to do and what your financial goals are. That's something you're gonna have to ask yourself, and you got to ask yourself, you know, like, are you willing to watch your ether go to 100 and potentially never return to this phase? Like, are you willing to roll that dice, or are you confident that it'll return? You know, like, it's totally possible that ether could one day go to 700. It's entirely possible that ether could go to 700 tomorrow. You know, I don't know what's going to happen tomorrow. I don't know what's going to happen in a year. All I know is what it's looking like right now, and that's how I plan to trade accordingly. You know, I don't really know what else to tell you. That's really unfortunate that you bought so high. Yeah, I don't really know what else to say about that other than I'm sorry to hear that. So is $50 a good support for Ether? Yeah. I would be shocked to see it go below $50. That would just be like devastating. And also keep in mind, okay, it's important to keep in mind too, that when I say it's going to pull back, that doesn't mean the market's going to pull back and just like stay here. I'm saying that like at the lowest, we'll see it pull back here before it does something else, you know? Like it's entirely possible it just bounces off of 100 and goes here and chills at 140. Or entirely possible it never even goes to 100 in the first place and just dips and goes here, or it goes here and it goes down here and it goes to a new all-time high. You know, that 3 pushes to a high doesn't tell us anything about the future. It just tells us that we're seeing bullish exhaustion and that it's likely to return to lower levels of support. That's all that tells us. It doesn't tell us anything about the implications of like the future health of the market, anything like that. Keep that in mind, you know, when you're seeing this. You know, I'm not trying to spread doom and gloom here. I'm just telling you that the next move is likely to be a strong move down. That's all I can say from here. All right, so so someone was saying let's check out Neo. Yeah, I actually haven't looked at Neo in a while. It's a good coin to look at. I really like tracking Neo because it trends well, and it has really good fundamentals. And let's look at the. I haven't looked at it in a while. Let's look at the. Actually, let's look at Bittrex, right? Bittrex has a longer history with it, doesn't it? Neo USD. Oh yeah. So Bittrex has been trading Neo for a while. Okay, so this is probably the most reliable chart. Oh yeah, I remember this now. Okay, so something I've been tracking with Neo is this macro descending triangle. So this pattern right here is called a descending triangle. Descending triangle. And it's just noted with, you know, lower highs and basically consistent lows. And so I would be shocked to see it break out upward if Bitcoin has a strong pullback. But regardless, this is a more or less agnostic triangle, and it can break up or down. Some people say that like descending triangles lean bearish, and they do, like by a marginal statistical advantage, but I like to view them as agnostic. And so this move is pretty substantial. So this is going to be, you know, this would be a $10 move. If it breaks up, we'd see plus $10, and if it breaks down, we'd see minus $10. So this would be, if it broke up here, this would be a $40 price target. And if it breaks down low, it would be a $17 price target down here. So it'd be somewhere down here. That's all I got for NEO on the macro level. If you, okay, question from YouTube from Barbara Kozicki. If you see an extended bear.
Wyckoff, correct.
Oh my god. I gotta donate. I haven't had a donation in a long time. Who was that? Let me see who that was. Is he gonna show me? I want to see it so I can thank him. Yeah, so for those who don't know, I actually do have a donation system set up, but I just haven't been really showing it very much, just because I already have paid content and all that stuff. Oh, I have two tips sitting in here. I have one from Dan. Oh, thanks, Dan. I got a nice one from him, and then someone as a Sira, some guy with a bunch of jumbled up letters, carroted me some Wyckoff. So thanks for that. That's awesome. Got cheer and a donation today. On a roll. So I lost my train of thought. Okay, so the question was, if you see an extended bear market, do you think it'll be very tradable? Yeah, so like, it's no secret that I'm better at trading bear markets than I am bull markets. So I tend to I tend to look for trading opportunities in the bear markets because I think they're easier. Personally, I think bear markets are easier to trade than bull markets. You just have to learn how to trade it. Which, if you're interested in learning how to trade a bear market in the crypto universe, I highly recommend you check out my Discord server. Let me go ahead and just shill that right quick. All my guys in there know how to trade the bear market, and whenever crypto goes on big pullbacks, it can be a little scary, but if you know how to navigate it, it can be very profitable. All right, I just talked for like the past hour, and I gotta go do stuff for the rest of my life. But keep an eye on this Bitcoin supply, this last point of supply. I'll post this chart on Twitter, so you guys can keep a close eye on it. And if you're interested in joining my, I'll go ahead and post this link one more time. If you're interested in joining my trading group, and learning how my various methods of trading and the various methods that other people in my community offer, go ahead and check out the Patreon link I'm about to post. And yeah, everyone's welcome. There's no experience level required. We have people that are brand new to trading, and people that are actually large players, the so-called institutional investors.
I graduated from the Wyckoff Institute in 2016 with a degree in Wyckoffing. I am the South.
Oh, I guess I should talk about that before I head out, right? So if you guys are interested in some juicy gossip, I'll just go ahead and fill you in on what happened on Twitter. I'm assuming a lot of you guys are here because of the Twitter, this ridiculous Twitter back and forth I had with the Wyckoff Institute that didn't really work out well for them. Are you guys interested in hearing that, or should we just cut off the stream? You let me know. I don't want to bludgeon you with this childish drama. Another donation from Dan. Thanks, Dan. You're the man. All right, so more than one person said they want to hear it. So I'll go ahead and talk about it. So essentially what happened was I'll go ahead and show you guys and I'll walk you through it. I released a video that explains all this, but I'll just go ahead and briefly talk about this. So as some of you guys know, I write the technical analysis for Bitcoin Magazine. And I released this article right here. And the title is Potential Wyckoff Distribution May Spring New All-Time Highs. And so these dudes at the Wyckoff Institute, for those of you who don't know, the Wyckoff Institute is like the original stock market exchange developed by Richard Wyckoff back in the early 1900s. He's like the OG of technical analysis. John Bollinger has even said that he feels he's the single most important contributions to technical analysis that our market has seen. And so these guys are a big deal, right? Sort of a big deal. They're a big deal in that they're in a position of authority, and they have a lot of students that train their quote-unquote Wyckoff trading techniques. So when they saw that I released this article talking about the Wyckoff distribution, they kind of just like they unfairly characterized my article, and I know for a fact they didn't read it, because the president of the institute, what's his name, Todd Butterfield, he said he didn't read it, and then he went on to just critique this one chart that I have here, right? Which, as you can see, is a very watered down version of this, right? Like, I have a pretty detailed version out there, but for the sake of portraying it to the common man, I watered it down, right? Like, I'm not going to sit here and go into a university level lecture, because I'm not qualified to do that, and because it's not an interesting read. So I watered down the chart, and I presented it in a digestible fashion for people who don't understand technical analysis but still want to like understand where the market's heading. Okay, so the first thing they did was sorry, I'm like getting flustered again. So the first thing they did was they had this stream, and the title of their stream was Bitcoin reaches new all-time highs and false Wyckoff gurus. So I saw it, on the side of YouTube. It said suggested videos or whatever, and so I clicked it. I was like, oh, this is cool. Like, the Wyckoff Institute is talking about crypto Wyckoff distributions. I haven't seen them talk about that, so I was like, oh, this is gonna be interesting. So I clicked it, and lo and behold, it's a stream shitting on me. So I'm like, whoa, like what the fuck's going on here? Like how are you possibly shitting on me when I'm like just drawing comparisons and being very explicit with the fact that I say, potential Wyckoff distribution. At no point do I say that it is definitely this. At no point do I say, like this is what's for sure happening. I say right here, potential Wyckoff distribution is underway, and I say, let's look at a macro pattern to draw a few similarities to the Wyckoff distribution schemes, right? Keyword here. Let's draw a few similarities. So this was pre-upthrust. We hadn't gone to 6200 yet, but I say, let's just draw a few similarities to the Wyckoff distribution scheme. Right, and so this whole article is me just talking about how I noticed that there were similarities between the distribution schematics that Wyckoff outlined, and that I noticed that Bitcoin was behaving in this sort of distribution fashion. And rather than them talking about the content of my article, which goes into a little bit greater detail, and not even taking into account that I fucking called the all-time high, nailed it within dollars, I said, an upthrust of this potential distribution phase an upthrust of this potential distribution phase would have a price target testing the upper channel in the 6,200 to 6,300 range. And lo and behold, that's what we hit, right? We hit 6,200. So these guys, they don't bother to read anything, and it's plain as day that I'm not like trying to claim authority over this. I'm not trying to be a quote unquote Wyckoff guru, as they keep trying to call me. They keep trying to paint me in this light by saying that I'm trying to portray myself as a Wyckoff expert. I'm not a Wyckoff expert. I'll be the first to tell you I'm not an expert in distribution phases. I'm just learning it, and I'm trying to convey the knowledge. I'm trying to convey this idea to the best of my knowledge. Because to me, this looks spot on, and from the literature that I can find, this looks like it's following this distribution phase. So at the time of their stream, they just sat here and they broke down. They didn't talk about any of my content. They actually just talked about this thing right here, and they were just like, "This can't be a sign of weakness. This can't be an upthrust." You know, and it was just like very petty, right? It was like kind of like a debate over semantics, and they're being very like pedantic and shallow, and it was just kind of weird, right? And that's totally fine. Like, I don't mind anyone critiquing my analysis, but what I didn't like was them painting me in the light, saying that I don't know what I'm talking about and that I'm a false Wyckoff guru. Like, I've never claimed that title. I've never tried to convey myself in that light. And all I did was write an article saying I see a few similarities here, and this is what I expect to be the outcome. That's it, right? So the first thing they say is they're like, you know, they make this big to do, and they say, hold up, you know, that guy Matt, he's like, hold up, there can't be a Wyckoff distribution that springs a new all-time high, okay? And he's like sitting there stroking his brow, like being all just over the top and hyperbolic. He's just like, oh my god, like who is this guy talking about Wyckoff distributions and springing new all-time highs? Meanwhile, anyone who knows the basics of Wyckoff distribution, you know, I showed you guys this earlier. An upthrust to a short-lived all-time high is like one of the key one of the key traits of a Wyckoff distribution, right? Here you go, boom. This short-lived all-time high. So at the time I wrote the article, we were sitting right here. You're sitting right here, and I said this sign of weakness looks like it's going to propel up to an upthrust, which is going to have an all-time high of approximately 6,200. Well, that's exactly what we did, right? And rather than them backpedaling their statements and saying, you know, like we mischaracterized them, they dug in deeper, and this is when it gets really fucking interesting, right? So I called them out on Twitter. I'll show you the Twitter feed real quick. So I called them out on the hell. So I called them out on Twitter, right? And because I mean, those of you guys who watch my stream, like, I have no problem calling a spade and being like, look, you're full of shit here, like, enough, right? So I said, this is how long this conversation goes, by the way. I'm not going to beat you over the head with it, but I'm just going to summarize it. So I said, so I messaged them on Twitter, and I said, talking to Crypto News Matt, I said, hey buddy, I just stumbled upon your complete misrepresentation of my Wyckoff analysis. Gotta say that's pretty unprofessional and irresponsible. And I sent them the link to where they start just talking shit about me. And I said, I'm going to provide a response, and I really hope you redact your fallacious critique of my breakdown. And what you see here is that it looks like I'm responding to nothing, right? I'm sending all these responses here. Well, that's because throughout this thread, they had no more rebuttals, and they blocked me. The Wyckoff Institute, the president and the COO blocked me during this conversation. And what really triggered them was when Chaboy, John Bollinger, stepped in, and he maybe I'm just being like overly optimistic here, but it kind of seemed like he stood up for me. So if we go to John Bollinger's Twitter, for those of you who don't know, John Bollinger is like the OG. He's a really big deal in technical analysis. He's the guy who created Bollinger Bands, and John Bollinger steps in, and this is what transpires here. So John says, after they repeatedly attack my, at no point do they actually address my content. They just keep saying, you know, like, I don't know what I'm talking about and I'm wrong, and they don't actually attack my points, aka a straw man. John says, I find this thread disturbing. Analysis is analysis. There's no right or wrong, just learning to understand the markets. No two roads the same. Like, first of all, kudos to John Bollinger, like hyper diplomatic, very like perfectly put, like summarized this entire discussion in 140 character tweet, and they weren't having it. They got pissed. And so John says, Wyckoff is sufficiently complex as to allow for many interpretations. All that matters is that your interpretation suits you. There are many paths up the mountain. And so they start digging in, and they say, you know, they're basically going back and forth with John. And so throughout this, they keep telling me that like my interpretation is wrong. And so I show them, like, here's the literature that I provided, that I referenced when developing my argument, and I showed them the literature, and they said that the chart was wrong from the literature. Where the hell is it? So I showed them this picture right here. It's a screenshot from the literature, and I say, look, this is where I got my ideas from. You know, like, I find them highly reputable. I'm not redacting any of my statements. And so then John Bollinger steps in, and he starts defending this article, because I got this paper from John Bollinger himself, who's a much more knowledgeable. Like, I cannot believe that they're even, first of all, the fact that they're even trying to argue with Bollinger in the first place was just like mind blowing. Like, you guys are trying to tell John Bollinger that he doesn't know what he's talking about, and he has done way more to contribute to market analytics than any of those two guys could even hope to accomplish, right? Like, this is like, he's like he's one of the biggest names in modern technical analysis right now. And not only that, but check this out. So from, like, this is how ridiculous this conversation got. Look where this bibliography gets its references from. It's from the Wyckoff Institute, the Wyckoff seminars, like all of this, the Stock Market Institute. This is their literature. Like, this chart comes from their literature, and they're digging in saying that it's wrong. And so, you know, back and forth ensues, and so I just fucking step out. I'm like, I'm not even going back and forth with this. This is so ridiculous. It's so obvious that you guys are so petty and wrong that I'm not even gonna like go back and forth. And so John keeps going back and forth with them, and eventually this dude, Wyckoff on Crypto, who's the president of the Wyckoff Institute, he blocks me because because all I did was I showed this chart. This is all I showed was I showed this chart compared to this chart, and he blocks me. So then John, I guess, gets pissed, and apparently sent them an email. And last night on their stream, they said that John Bollinger has cut ties with them. Like, he no longer wants to associate with the Wyckoff Institute, which is crazy. Like, that was a huge power move on his part, and I can't believe that they even admitted that on their stream. So anyway, long story short, the Wyckoff Institute was like trying to shit on me in an effort to shill their institute, and it backfired big time. And so these guys, they just had one of the bigger names in market analytics just basically say, I'm done with you guys, and they admitted it on stream. I can't believe they did that, but they did. So anyway, that's that whole back and forth with those guys. So some of you guys are asking, why don't I debate these guys? First of all, because I don't think there's anything really to debate. And not only that, but like, when this first started happening, the only reason why they're saying that This is so stupid. Because it's all he said, she said. And especially since I can't prove anything because they blocked me and you can't see the discourse. But those guys, they basically they fucked up, and it made them look really, really bad, because what they thought was going to be an easy plug for their institute ended up blowing up big time, because they didn't know who I was. They didn't know where I got my material, and so they didn't know that like I got that material directly from Bollinger himself, and yeah, they just kept digging in their heels, and it made them look really bad. And to be honest with you, like, I'm really sorry that happened. Like, that wasn't the intent behind me bringing this up. Like, all I wanted them to do was just redact their statements and stop trying to smear my credibility, because that's what they were doing. And not only mine, but like Bitcoin Magazine's credibility. And you know, I didn't like that. I didn't like, because he was a cheap shot at someone who wasn't there to defend themselves. And so I said, you know, bring me on your stream and let's talk about it. And they never did. So I released a full video response, and that's when shit hit the fan. So if you're interested in viewing the video response, I have a video on my channel called oh, that's not it. Whoops. I have a video right here. So if you're interested in viewing the entire detail and the breakdown where they talk about you know, it's their part, and then I go back and forth and I break it down. It's pretty long. It's 38 minutes, but if you're interested in getting more details about that, I have a video, and here's the title. Anyway, that's the last time I'm going to talk about these guys. You know, I'm really sorry that like it's getting bad press for them. Like, I really just wanted them to apologize for mischaracterizing my analysis and me as an analyst, and they refused to do it. And man, it made them look really bad. So anyway, that's all I got for you guys. Yeah, you know, keep an eye out. We see here that the number 2 contracts holder on whale calls, or on OKCoin, just upped his position massively. So I think we're about to see some big moves today. All right. Well, that's all I got for you guys. You guys have a great weekend. Try not to eat too much candy while you're trick-or-treating or going to the Halloween bars. Don't be a curmudgeon. Dress up. Have fun. That's all I got. Also, if you're interested in joining my Discord, here's the link one more time. I just got to show that out if you're interested. Cool. All right, thanks. You guys have a great weekend.